Hi traders, welcome to this Blueberry Markets video update with me, John Kibler. Welcome to this episode of In the Trading Zone. These videos are going to be a little bit different to our other videos. We're going to check out different types of currency pairs as we usually do, but in the Trading Zone I want to focus in particular types of markets that we really want to be engaging with. Now, we're going to take a look at the US dollar today. The US dollar dominance continues yet again. We actually had some data out today where we saw ISM manufacturing PMIs come in a lot better than forecast. Forecast was showing potentially coming in at 47.8. It jumped, it went to 49 that we can see just here. So obviously some really good data out of the US. We had Federal Chair Powell speaking as well at a sort of community event. So we've had a little bit of volatility surrounding that. But really the driver has come from this ISM manufacturing PMI today. Now, dollar continuing to trade higher. This is something that we spoke about in our live streams. This is the US dollar index currently on a daily chart, and we can see that price is above this key area here. So we basically pointed out the recent yearly highs, which were at the time around about the 106 handle that formed on the 8th of March of this year. Price smashed through that last week. We had a little bit of a retest on Friday. Coming into this market today, we were wondering if price would hold above that level or come back down. What we didn't want to see was any kind of false breakouts. I didn't want to see price start to fail here, and I didn't want to see price come back within the range. We've also got a really nice trend line support running through here at the moment on the US dollar index, which is supporting that market. Now, the target for dollar index, if it continues to move higher, could be this 108 handle. The 108 handle formed from this high back on the 21st of November 2022. Now, if that's the case, what can we look for? Well, what we can expect to see is potentially some euro US dollar downside. We're trading at that 1.05 handle at the moment. We're looking like we're breaking that to the downside. If we can break that to the downside, then again, we have to ask ourselves the question, where's the next likely place for price to go? And we've got these lows that are just down through here. That's on the 30th of November 2022, and this level's on the 21st of November. So around about that 1.0327 and below could be good targets. Now, if I just use the volume profile tool for a second, I just want to go from the swing low here up to this swing high. I just want to see volume within this condition here, because what I like to look for is sort of an area that price could come into and then try and pick out those volume levels within that. And we can see there's actually quite a decent volume level around about the 1.0372, and then there's another one around about that low at the 1.0330. So that zone there could be of interest for sellers in the near term. Obviously, what I will be checking on is that US dollar index though. Does it reach that 108 handle? And if it does, how does that affect euro US dollar? One currency pair that's dropped quite significantly today is the Australian dollar versus the US dollar. Australian bank holiday at this current moment in time, and we've seen that the Australian dollar has performed poorly today. That could have been from the poor data out of China, where we saw a little bit of a slowdown. So is that affecting this Australian dollar now? We came up into that resistance back at the 0.65 handle. This was been pretty decent resistance most recently, identifying it on the high there on the 20th of September and the 1st of September. That level there has acted as resistance again, and we are pushing back to the downside. So be interesting to see if that can continue lower as we are approaching a key level of support. A break below this support, we've got then the 0.63 handle and then the 0.62 handle that could be targeted. One other chart I wanted to take a look at obviously is gold. Gold continuing to push to the downside here. We did talk about this volume level down through here at the 1836 handle. Price has pretty much ignored that, so that's telling me that there's not a lot of buyers defending that level at the moment. So we're probably going to see a continuation here on gold. 18.15, the likely level now for gold to go and target. So if we're looking at this area here, what I would particularly like to see is actually a little bit of a recovery from gold. I wouldn't mind seeing a little bit of a push higher before looking for that continuation. Remember, I don't really want to sell as prices coming into support. I want to be looking to sell at previous highs. So looking at the 4-hour time frame in here, you can see that we've got this kind of zone just through there. Now if I was to volume profile in here from the swing high down to the current swing low, you can see that we've got a nice volume spike coming through this area here. So around about the $18.73, $18.74 zone, that could be a good area to look for resistance. If price was to reach that level, we could be looking at our volume tools to see what happens to price. Do we get like a double top pattern in there? Could price then trade even lower? I do think if this volume level does get supported though, let's just say price does rebound from here, we get a bullish candlestick, that could lead to that drive back up into this actual value area low from this high down to the current low. So we'll see if price can pull back. If it can, then sellers may be interested in price yet again at this point, dependent on how the US dollar performs for the rest of the week. We do have other data drops coming out. Obviously, we do have an RBA interest rate decision coming tomorrow. We've also got JOLTS job openings coming up next, which is looking like we're going to see a rise there as well. And then obviously we've got our NFP data, we've got our ISM services PMI. So if the dollar can continue to produce good results, then there's no reason why the US dollar index can't continue to rise and that dollar dominance remain. What I would say is one chart that I did want to discuss, and I did talk about this in the video yesterday. I wanted to talk about the mortgage rates, and this was the chart that I was talking about. This is the MBA mortgage refinance index. Okay, now just to kind of give you a bit of context about what this is, it says here the MBA weekly mortgage application survey is a comprehensive overview of the nationwide mortgage markets, covers all type of mortgages. Okay, basically what it does is the entire market is represented by the market index, which covers all mortgage applications during the week, and obviously it covers the refinance. Now we were talking about this in terms of comparing it to other economies. The US has sort of 10-year, 30-year mortgages, and you can see here that the refinancing rate at the moment is still very low. So that tells us that there's not many people refinancing, and like I was saying before, there's probabilities that if they're not refinancing, they're not being affected by the recent interest rate hikes. That means that there is more money surplus in the economy. Going over to our US 10-year bond note yield as well. You can see here US 10-year Treasury notes. We can see that we are up at 4.6%. We're approaching the highs back in 2007 at 5%. If that breaches those highs here, the next level it could go to are the 2000 highs at 6.65. So that's going to be an interesting chart. That's a 25-year long chart as well. If we go to a 10-year chart, we're at the highest level it has been in 10 years. Obviously, highest level it has been in 5 years. So interesting chart to look at as well. Driving prices higher. The ceiling for that could be the 5.15%. That could coincide with the US dollar index being at the 108. So have a little look at that one as well. Thank you for watching this video update. I really did hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to our YouTube channel to see some Forex trading content. And I'll speak to you in the next video.